Welcome back to my coverage of the Cannes Festival of Creativity. Yesterday I was able to pop into the Mirakl Cabana, where Mirakl was releasing some new research that it had partnered with Forrester on. So I want to recap a few findings from that research with you and play some of the takeaways that I took. But first, you might have seen there was a little bit of a standoff between myself, Colin Lewis, and Andrew Lipman at the inaugural Celebrity Deathmatch here in Cannes. There was great feedback from the event. It was something a bit different from all the polite kind of panels where people tend to agree a lot. This was a lot more controversial and pretty fun. So I'm really hoping that other people run with this format as well, because it was pretty fun for the audience and definitely a good way to understand opposing points of view. I would love to see brands take the position of retailers and retailers take the position of brands on things like measurement standardization. That would be a pretty fun debate to have. Let's move on to some new research from Forrester and Miracle. Nikhil Lai from Forrester presented this at the Mirakl Cabana yesterday, and the research is called "Are You Sitting on a Retail Media Goldmine?" Let's hear from Nikhil.
This is our latest data on where the money's coming from that's spent on retail media. We're showing more than half of the money coming from existing trade and existing shopper budgets. And so this is from the biggest suppliers of the biggest merchants around the world. The key thing to note here as well, to bring it back to marketplaces, is that the 3P sellers are spending digital media dollars on retail media. They don't have the kind of trade and shopper relationships with the big merchants that's the smallest. So that's another point here to know that if I were to draw this graph for 3P, it would be pretty much all shifting from search or social into retail media. And then just a couple more slides to set the stage. This is the big challenge for retailers, which Daniel pointed out. More than half the money is coming from trade and shopper today. That's money that the retailers are already getting. And so they need to begin to take share from the search walled garden, the social walled garden, the TV walled gardens, to generate the high margin income that they need to offset losses in other parts of the business. And so this is a challenge for retailers. Again, marketplaces are key to changing how this graph looks. And finally, before we go into the study's findings, this shows for the large commerce networks, which are $1 billion plus in revenue that I had on the first slide, they're getting about 30% of spend from their biggest suppliers. They have those shopper and trade relationships. More than half the spend is coming from small advertisers. I think that this is hugely overlooked in the conversation about retail media, frankly. For the smaller commerce networks, as they scale up, they're going to tap into more small advertisers as well and aggregate a lot of that third-party demand to grow.
Right, so I guess we indeed are sitting on a gold mine, and the gold mine is marketplace and long tail, mid and long tail advertisers.
Right.
And so, well, I guess where do we dig? Why is it still not an opportunity that retailers are seizing to the full extent of this opportunity? What are the challenges? What are the right ways to approach it?
I think one challenge is cultural, in the sense that the retailer's most important relationships are with their biggest suppliers, and they're going to focus on the head of the market. And the biggest suppliers also want more leverage with retailers, so they're trying to allocate more trade and shopper dollars to retail media to get leverage in those relationships. And so culturally, retailers having to focus as much on the long tail or the mid tail, and then also the tech that's been built for retail media is conducive to the biggest advertisers. And on the RMN side, the main services that they run are also conducive to the biggest advertisers. So I think that there's a massive long tail that's been underserved technologically and culturally, and I think that's why this hasn't been mined quite yet. But these are some of the constraints now, which I think speak to, I think that these are lagging indicators of the culture within retailers that is being changed as retailers become more like publishers, as they acquire and hire media DNA. I think that these numbers are definitely going to move. So the challenge that, as I mentioned, are culture, partners, and processes. The biggest challenge is, we need the right tech, first of all, to enable the mid to long tail. What we have today off the shelf from Google or from Criteo or from Cody or from Kevel is not conducive to mid and long tail demand. Then we need to prove the value, the incremental value of retail media to whoever buys it, and we need to serve both 1P and 3P sellers. So all this data that we found, I think, substantiate the dark thesis that we've been working on together about the fact that there's this huge opportunity that's being overlooked right now, being underserved. You need easy onboarding for self-service. This is for on-site as well as off-site, and fully automated campaigns. So the kind of ease and efficiency that these smaller advertisers are used to with Performance Max or Performance Plus from Amazon or Advantage Plus from Meta, they're expecting from our events as well to be able to self-serve ads and take money from the search and social walled gardens and divert it to, the Walmarts and Zalandos of the world.
I think the conclusion from this research is retailers should look to the long tail for growth, and to secure that long tail, you really need a marketplace. That's it for this episode, and I'll be back soon with some more takeaways from Cannes.